All right, guys and gals, this is Blake Morrow. You are listening to the Morning Edge webinar. Hey, thanks for the retweet of my tweet. I don't tweet the link often, but I did this morning, so thank you guys for that. All right, so what we're going to do is we're going to go through all the majors. Let's go through all the major pairs as we normally do, and let's get ready for today's final GDP and weekly unemployment claims. So. Going back to we'll go into the euro dollar, and as you guys know, we've been in a really tight trading range, really tight trading range, and we are once again just tightening up in a we're tightening up in a wedge in the euro dollar, and surprisingly, the euro just hasn't. I can redraw all this, but I'm gonna have to because I'm surprised that the euro really has been as dead as it's been. I mean, there's been like absolutely no reason to trade the euro, and even yesterday, you guys heard me. It's like, there's nothing to do. There was nothing going on in the euro or a lot of these majors, and finally the dollar yen stoked some volatility. I shorted some Aussie and Kiwi overnight. I bought some Canadian yesterday as the Aussie was approaching, the 70-cent level resistance, and the Kiwi is at 73 cents. You guys know that we were all at big resistance. We'll talk about those in a minute. But the euro dollar, there's just nothing to do here. Now, I'm not saying that there won't be anything to do today, because there probably will be. But a couple things to note. All right, so when you're looking at the euro dollar, so we know that the 618 is holding. What do I mean by that? Well, if you take the low to the high of this, just the apex that we're dealing with, the 618 is still managing to cap prices, or to cap the downside. In other words, it's holding us up. All right. Now, the support here at 111.80 is going to be big today, because if we break that, then we will test 111.20. All right, which is right here. Okay, 111.20. Now, 111.80 is more important at this moment. 111.80 for support. Resistance. Okay, we can see how we're capped here at 112.35, but really the resistance is up here at 112.65. I think that because we're so close to this, I think that if it's a weak GDP number, like Paul's expecting an upside surprise. Yeah, I think expectations have creeped up for final GDP to 1.3%. How about if we come in a little lower than expected, like 0.9%, which I think is possible. All right. If that happens, then you want to be a seller up here at 112.65, and that's what I'm looking to do. I'm actually looking to short the euro on a move up to 112.65. Okay, we are in a range environment. We are. All right, let's take a look at the cable. So the cable underperforming today, but still same analysis from yesterday, right? I guess I can just move this stuff over rather than redrawing everything that's from yesterday. I'll just do this. Nothing's changed from yesterday. Exact same stuff. All right. We have major support at 129 change. Now, this is, if you guys don't recall, we had this nice hammer on Monday, Tuesday, Wednesday, today's Thursday. We've actually had a nice, bounce higher in the cable since that hammer formation off of this trend line support. Okay, which you can just simply put like that. But all in all, the pound is still really range bound, but we're in a bearish trend. I have to note every day, just so you guys can make sure you know where I'm coming from. I have to make sure that everybody sees this. We are consolidating at multi-decade lows, at like 3-decade lows. We are trading below 135. So as long as we're below 135, this is a bearish It's still bearish, all right? Now resistance this morning is 131. Whoops, not 113, 131. Still, right? Nothing's changed from yesterday. Or 131.20 actually. 131.20. Support is still down here. You know, I think dips are going to, well, obviously dips down to 129.10, but, you know, we might even find support ahead of that, maybe at 129.50. Okay. So those are you know, supports that we're dealing with in the pound. I mean, I think you'll get a bounce ahead of 129.10 personally, but if 129.10 breaks, it'd be a very bearish event. Okay, let's go over to the Swissy. So the Swissy, same thing as the euro dollar, and it's range bound. Same deal here, right? Between these yellow lines. Play between the lines. This is your sandbox, kids. This is the sandbox. Play nice in your sandbox. Don't throw sand at the other kids. You know, this is your little box that we're trading in. No real reason to step out of the sandbox either. The support at the 618 still holding. Spike lows still holding. Okay. So 96.50 is still big support. 97.50 is the 618 on the way back up. Okay, so it's still 96.50 and 97.50. Still, no reason to trade this bad boy. But I will state that, and let me just go back over here really quick. I will state that we are also in a very tight triangle, and also that we're in this this channel that's been moving lower, and you guys know I get extremely bullish above like 99 cents. If we ever break 99 cents, I'm going to get extremely bulled up the dollar Swiss. Period. End of story. Okay. It's all no if and or buts about it. I know I've said that to you guys about 1,000 times over the last couple of weeks, but keep in mind that we are still trading above multi-decade trend line, and we are just now on we're outside of it, which is this one right here. Okay, that's the multi-decade trend line, and we're outside of it in a parallel channel that's moving lower, and that's why that if we break above 99 cents, it's just it turns instantly bullish. And you have to look, if gold goes down, the dollar Swiss should break out. That would be one currency that you have to pay real close attention to. So again, if gold breaks down, the euro is probably a layup short. Aussie, Kiwi, dollar yen is a long, dollar Swiss is a long. All right, that's like the things that are on my radar if gold actually breaks 1305. All right, let's go to the dollar yen. Now the dollar yen, guys, I'll reiterate. I know I blogged about this 2 weeks ago. Here's the blog. Is the dollar yen at risk of a rally? Okay. Has everything to do with the correlations that you see in equities and in bonds. And if bonds continue to sell off and yields continue to rally, it doesn't matter what stocks are doing. If stocks are going down and bonds are going down too, and yields are going up, this dollar yen is going to break out. We are on the cusp of a breakout right now. I don't think people realize how big of a deal that this rally is overnight. Okay, we are staging a massive rally even as futures are coming down, and we're holding on top of that. Like I said, if the dollar yen goes up and we break 102, okay, now why is 102 a big deal? Because of this. Okay, we break 102 today. If we break 102 today, that's a big deal. Okay, a break above 102 is extremely bullish. Now let's also think about this for a second. Let's call that a double bottom because it is. Let's call that the neckline because it is. Let's see where this thing points to because it does point higher. I have to. Sorry, guys. I'm gonna have to tweet that. You know. Actually, I'm not. You know what? I'm not gonna tweet it. I'm gonna leave it special for you guys. That dollar yen points up to 102.35 right now. Okay. Does that make sense? So right now, resistance is at 102. But based on our double bottom, it looks like we can go a lot further than that. Now support is the breakout point now, which will be that high right there, which is 101.25. Let's support. We're in a bearish trend, so everybody understands why we're in a bearish trend. That's because we're in a channel that's had us bearish literally since the beginning of the year. We are threatening to go neutral. I think one of the first times we've gone neutral in maybe all of 2016 on our bias chart. I'm pretty sure that we've been bearish maybe about 85% of the time of all of 2016. We were threatening to turn into a neutral trend. That's pretty big, right? That's a big deal for those of you that are here normally, and especially for those of you that have listened to this webinar for more than 10 years. You guys know it's big. It's a big deal when, you know, especially the dollar yen this year, to switch it over to neutral from being bearish. Okay, let's go over to the Canadian. So here's the Canadian. The Canadian, I mean, we remember the Canadian took a beat down yesterday because of this OPEC news. Okay, right. So you got the potential here of a bear flag pattern. Now I can't ignore the fact that we are, you know, here at, you know, holding, you know, because you get overshoots here. We're kind of holding this trend line support. But the Canadian can post a bear flag, and the Canadian currency can continue to strengthen, especially if crude oil continues to strengthen. Because if crude continues to strengthen here, then the dollar Canadian could fall, you know, as the Canadian currency strengthens. But I got to ask you this question. For those of you that are crude oil bulls, if you're a crude oil bull, give me a reason now, not talking about yesterday. I'm not talking about your reason for 2 weeks ago. I'm not talking about a reason for, earlier this week. Give me a reason now why I should buy crude today. Give me a solid argument. See, crude bulls have been waiting for this OPEC meeting that we're going to have some sort of agreement with OPEC members, and it was going to get done, and that was the whole reason for being long crude. Okay, the news is out. It's out. Everybody knows. Everybody also probably knows that OPEC is a bunch of leaders that really are out for their own self-interests, which to have an agreement that is as ambiguous as the one that we got yesterday, that we'll get the details in November, is a little shoddy to me. So I look at crude oil, and if you guys remember, do you guys remember my analysis of crude yesterday? Yesterday during the Lunch Money webinar, before the announcement came out, I said, hey, this is just an hour before the announcement came out. I said, hey, I bet crude's going to rally past this resistance at 46.50, hit 47, hit this trendline resistance and reverse. And the announcement came out like an hour later, and it hit, and we stalled. Okay, now, I need a reason now. As a crude oil investor, which I don't, I'm just trying to make a point here. I need an argument now. Tell me the reasons why I should be buying crude at this stage in the game. It's not because growth is outstripping demand, because they actually had to lower output. They have to lower output to meet demand. But first of all, do you think they're even going to manage to put something together before November? And B, is it really going to matter in a world where crude oil is becoming less and less attractive? Yeah, Kevin said production hasn't even changed yet. It may not. Right, exactly. It's like, okay, well, give me a reason. Give me a reason to buy. That's why I'm a little skeptical right now, and I'm making these points, guys, not because I'm trying to argue I'm bullish crude or bearish crude, but I'm trying to argue these points because it's like, okay, well, should I be selling the Canadian currency right now, or excuse me, buying the Canadian currency right now? Because I look around, I look over to Canada's economy, and I start thinking, well, crap, their economy is, on the ropes here. I don't know if I really want to be long the Canadian currency. And is that the only bang for my buck I'm going to get after this crude oil announcement? So I guess the point I'm trying to make is I think it's a little dangerous to be buying the Canadian currency here. Now, while we're above 130, I think 130, this is not like uncharted territory. You guys remember how big this 130 level was last week? Well, I think it's going to be a big level this week. I think it's going to be a big level today. So I think even if we sell off to 130, you've got to watch it because there's a 618 retracement right here, right? That is, buyers came swooping in before we even got there. So I think 130 is going to be huge. Now, if those of you that are bearish the dollar Canadian to this argument, I mean, I think that anybody who's stuck on the long side of the dollar Canadian, we noted all week the false breakouts above 132. I think anybody who's stuck on the long side, they're going to be looking for exits though. So, any move up here to 131.40 is probably going to find some sellers. All right, so I think that is going to be resistance. What I'm trying to say, guys, is before you get too bearish the dollar Canadian and too bullish crude, think about what's transpired and think about what do the, and we're still in a range here. What do crude bulls have to look forward to now? It's kind of like, it's one of those things. It's like when you're taking you take a stock and you go, oh wow, great earnings. But we knew there were going to be good earnings. The earnings came out, and then the stock goes down, and you go, why'd the stock go down? We had great earnings. So, you know, the news is out. So I don't know if we're at a sell the news, buy the rumor, sell the news event, but you got to be careful for that. All right, so that's the Canadian. All right, when I get back, we'll do the Kiwi, Aussie, dollar index, peso. Remember, the Banco de Mexico, their central bank is making a decision on interest rates today. They're making they're slated to raise rates by a half a basis point, could be three-quarters of a basis point. I have no peso exposure. By the way, for those of you that were not aware, yesterday after that OPEC news came out, I was short the U.S. dollar Mexican peso at 57. 57 was my cost average. I exited it at 35, right at that when that news was out. So I didn't get the low. I just happened to be in front of my computer when that happened, but I got out like right here. I got a good price, admittedly. I got out here, and so I don't have any peso exposure anymore. But we do have a big double top in play. But we'll talk about that when we come back. So go grab some coffee, tea, water, whatever you got to do. I'll be back in a few moments. Thanks, everyone. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So let's continue our analysis. We got actually a lot to do before we cover the GDP numbers and the weekly unemployment claims. So let's get to it. All right, so here's the Kiwi. The Kiwi continuously, I shorted it overnight, by the way, just so you all know. Because while we're trading below these trend lines, I have no problem being on the short side of the Kiwi. I do believe that we're, currently attempting to develop a big head and shoulder pattern here. Also, you can see trend line resistance comes through here like that. So, while we're below 73, while we're below like 73 cents, 73, you could say 73.10, it makes sense to me to be on the short side. Now, I'm just kind of cleaning this up a little bit. You can see all this, just rejections up here, multiple. So, to me, it looks like we're going to eventually make our way towards 72 cents. We do have support ahead of that at like 72.20. But overall, I mean, I'm just going to write down 72 cents, and this is major support, 73.10, and then it is a bearish trend. Now, remember, the reason why it's a bearish trend is because if you look at the big channel, okay, the big channel that we've been in, for the last year, calendar year, not calendar, I mean 12 months basically. We've broken below this major trend line, and that has put us really, in play to make a move back towards 70 cents. We just have to break 72 cents first, but it has turned bearish as a result. Okay, now we'd have to get all the way back above 74 cents to really take off that designation, but right now it's bearish in the trend. Now let's go over to the Aussie. The Aussie, I shorted this one overnight as well. You guys know how big of a resistance this is. Now let's stop here for a moment and talk about the Aussie. Okay, the Aussie is in the apex. Okay, the Aussie is in the apex of this triangle. That's why it's so freaking disastrously, tricky. Okay, it's been really challenging. You have to trade it at the ends of this triangle while you're in the apex. Okay, we do have a big double-headed inverted head and shoulder pattern. If we break, like if we break above 73 and a half, or 73 and a half, excuse me, 77 and a half, it's gone. The dollar, the Aussie dollar is gone. And I'm gonna tell you right now, if the Aussie dollar breaks above 77 and a half, especially on a weekly basis, so like let's say tomorrow, by the end of the day, which could very easily happen, tomorrow by the end of the day, the dollar yen is trading at 77.60. I will at that point in time probably buy the Aussie against everything, and also come to the realization that gold's probably going to break above 1350 eventually. Okay, there's a lot of work to do, and do you know what? Do you know what the and I'm going to ask you guys this question really quick. What do you think the propensity is for most traders to do in this situation? When you see the Aussie that is slid from 105, 110 down to 70 cents over the course of the last couple of years, what is the natural inclination for everybody? Analysts, traders, what's the natural inclination for people to do right now? To go long, right? Yeah, no, look, we've had a 30% depreciation of this currency over the course of the last couple of years. It can't go down any further than this. This is definitely a bottoming pattern. It's time to go long. That is going to be the majority consensus of humans, just in general. No one can fathom that the Aussie dollar at this stage in the game can go back to 60 cents. All right, so that is the natural inclination. So everybody and their mother's brother's uncle's nephew, monkey, is looking for a long in the Aussie dollar, and everybody's prepared for a bullish breakout. Look, stocks haven't even started to go down yet. Stocks are near all-time highs. If stocks start to come down, I'm in the camp that the Aussie dollar is still going to feel some downside pressure. Okay? So here's the thing. All right, you can get as bullish as you want while we're up here against trendline resistance. I'd rather be on the short side. I shorted the Aussie dollar near 77 cents last night. Okay? And I continue to stay short. I need the market to prove to me that I'm wrong. Matt, I just said it. Matt says, so where's the entry position for the move higher? Didn't I just say it? Did I just say it? I just said it. I just said it. I literally just said it. Like, were you not listening? I just said it like 3 minutes ago. I said if we get a weekly close above 77.50, like by the end of the day tomorrow at 77.50, that would turn me extremely bullish, the Aussie, right? Then you have to start looking at the Aussie dollar as being extremely bullish if we end up the week right here. Sorry, I just need to make sure you're listening here, all right? Sometimes I feel like my wife. She always says, Blake, I'm talking and you're just not even listening to me. Matt, you made me feel like my wife. How dare you? Okay. All right, so like I said, I'd rather be on the short side here. I'd rather be on the short side here. But if it does break out, it's going to be massive. I'll be the first one to admit. All right, now, big resistance, big resistance. Again, my trend lines aren't perfect, nor are anybody's trend lines perfect. Okay. If you could draw trend lines perfect, and if technical analysis was, oh, stocks are coming off right now, by the way. If you can draw trend lines perfect, and you could, I mean, if technical analysis was precise, we'd all be billionaires. But unfortunately, you got to be a little flexible with your trend lines and your analysis, and yeah, so you can go like that, right? One of the things that this morning in our chat room, like early this morning, I said, hey guys, we've taken out our uptrend line in the Aussie. We were trading down here this morning. So look, we're trading below this trend line. This is about 2.5 hours ago. All right. If we break in the Aussie, now remember I drew this yesterday. I said, hey, remember yesterday? I said, hey, if we get a rally to 77 cents, it's going to be a good short. I drew that yesterday. In Asia, we rallied above, oh crap, I didn't want to do that. We rallied above 77 cents just to squeeze out some people because it's Asian trade, and that's what happens in Asian trade, right? They just like to screw everybody. So I have to draw this again. So we spiked above that 77 cent level, and now we're at risk. Now we're at risk. You ask me, at risk of what? I'd say we're at risk of making some lower lows, and if we make lower lows, that's a problem for bulls. So this spike low down here at 76.44 is important today. 0.7645. Resistance 0.7700, 0.7750, and then I'm going to put an asterisk there because it's so important if we break 77.50. All right, we are still in a range until the market proves us otherwise. We are still in this apex of this triangle. All right, let's go over to the dollar index. Sorry, let me just log back in that. All right. Dollar index. Okay, so here's the dollar index. As you guys know, we are in a channel. Now, here's the thing. The dollar index, if we break below 95.05, it'll be an extremely bearish event. Okay? It will be. If we break below 95.05, bearish event for the dollar index. 95.05, bearish event. Okay? Could happen. Could happen today. Let us post a final GDP at 0.9%. We could test that today. Resistance still, even after yesterday's false breakout, is still 95.65, which we wrote down, I think, the last several days as resistance. Take this high to low, 50% retracement. Sorry, it's still 5 o'clock in the morning here, and I've been up for a couple hours, like 2.5 hours. What time is it? Oh no, what is I going to write? 95.65 is resistance. We're in a range. Peso. Like I said, I got out of my peso. Banco de Mexico meets today. They're expected to raise rates by 0.5 basis point. They could raise 0.75 basis point. We still have a double top lay. Okay. We still have a target of 19. Resistance, I think, is safe to say we could write yesterday's high at 1955. Okay. Support will be 1930, and because that was following the OPEC announcement, and then 19. If Banco de Mexico raises rates by 3/4 of a basis point, which is at 11 a.m. Eastern, I think, I'm 90% sure, then we could trade down to 19. So 19, 1930, 1955, and because we were bullish, by the way, we were bullish up until we broke back below the breakout point. Now we're back in a range. All right. I was short the US dollar Mexican peso. I made some pretty damn good money yesterday, and I closed it out at 1935, and I have no peso exposure going into the central bank meeting, just so you all know. All right, Norwegian krona. Now, I'll tell you guys, the $8 level in the Norwegian krona is huge. I mean, it's huge. Because, you know, if we can really start crack-a-lacking through here, through this support, that's enormous, all right? But you can see the hesitation. It's the daily candle. We're already, you know, trying to form a hammer here. Crude's come off a little bit. You got to be real careful. You know, again, you look at the longer-term charts and you go, oh god, you know, here's a topping pattern, you know, after this big massive rally. But if crude starts to pull back, then we're going to end up bouncing from this $8 major support, which I know we have a spike low at 796, I think it was 797 basically. But I'm just going to write down 8. And 8, by the way, is 161% extension of this move, right? It's 8. I write down 8. Sorry, didn't mean to yawn. I know it's contagious. It's a big deal. Resistance right now for today is right here at 808. See, if we get above 808 in the US dollar Norwegian krona, we're going to squeeze. Because people are going to go, damn it, we're not breaking 8, and then they're going to squeeze back to like 815, you know. But 808, 8.08, it's resistance right now. We are I want to put bearish, but I'm not going to. We break through 8, we're going bearish, and I'll tell you, the Norwegian krona is already broken down or broken out against the euro, against the Swedish krona. You know, you look at the euro Norwegian krona just as an example, and look at this thing. It's already breaking. You know, you can see how strong the Norwegian krona is right now. But against the dollar is another animal. You know, you break against the euro is one thing. You break against the dollar, that's another thing. But it's got momentum, and I'll tell you that Norwegian krona looks strong. And you know, my colleagues at Forex Analytics, they're very, very bullish the Norwegian krona and have been for the last couple of months. And they blogged about it. So you just if you go to the blog, and you know you read about it, but they were extremely bullish the Norwegian krona here. So Swedish krona, different story. Okay, you look at the Swedish krona, and we are just still in this range here, and also keep in mind we are very, very close to a big resistance. 862. 850, I think we've written down the same numbers every day pretty much. 8.5000, 8.620000, and we are in a range. Okay. Okay, your bias chart is finished. and we have a few minutes to spare. So let me see if I can take some questions really quick before we get all this data dumping.